Hey, all, welcome to the Brent Bruce Daily. Today is July the 18th, Monday. Happy Monday. Let's go ahead and take a look at where home loan interest rates are today. But first, let's take a quick look at a headline here that I wanted to point out. So let's just imagine that you had a rich uncle and you heard that he was, going to give you $100,000 and came back a month later and said, you know what, I've got bad news for you. I'm only going to give you $80,000. Okay, so we have to keep in mind, so you would say, like, wow, my uncle just took away $20,000 from me, 20%. Or would you say, out of nowhere, my uncle's giving me $80,000, okay, 100% of $80,000. And that's the kind of stuff that you need to think about when you're looking at some of these articles that we're finding, especially when they're from Diana Olick. She likes to somehow put the negative spin on anything she can get her hands on. So, for instance, this here says that home builder sentiment plunged in July as buyers pull back. Now, home builder sentiment is down. Interest rates are up. Things have slowed down a little bit. So, home buyers builder sentiment is down a little bit. So it says right here that the builder sentiment level dropped 12 points to 55, according to a monthly survey. Now, if you understand how this survey works, anything over 50 means that the builders see the market as strong. So at one point, it was as high as 80. They were over the moon for new construction because they know that we don't have the inventory. The new construction is what we need here. We need more doors, and we still do. So the fact that they're not as excited doesn't mean that they're not excited. So she paints this picture like builders have their head in their hands crying in their milk, and that is not what's going on. It's just that they're being realistic and saying that maybe it's not as hot as it was. Okay, so keep that in mind. Don't be mad that your uncle only gave you 80 grand, right? So keep that in mind as we look at some of the reports that are going to be coming out. Other than that, the other big news of the day is that the Federal Reserve, there's people that kind of whisper with them and I guess talk with them at barbecues and cookouts or something like that. But every once in a while, there will be an author or someone like that in the media that will come out and say that they heard that the Federal Reserve is going to raise the federal funds rate by 100 basis points or 50 basis points. Now, we had all been starting to get our hands around the thought of 100 basis point, which is 1 full percent increase in the federal funds rate happening on the 27th of July. Now we're hearing from what has become a very credible source that it is only going to be 0.75%. So really, interestingly enough, home loan interest rates are not liking the fact that the Federal Reserve is only going to increase the federal funds rate by 0.75%. So once again, this is an illustration that we want, if the Federal Reserve increases the federal funds rate, oftentimes that reduces home loan interest rates because it's fighting inflation. So let's take a look and see how our Brent Bruce Daily scenario has responded to the thought of the Federal Reserve only increasing the federal funds rate by 0.75% rather than 1 full percent. Now, I can tell you that early on, I was seeing our mortgage-backed security that we're following here down quite a bit, 30, I believe it was 30 points earlier today. Now we're only down 6. We were seeing the 10-year Treasury over 3%, and we don't want it over 3%. Now it's back down to 296. Over here, this chart, once again, showing how we're bouncing off of a 25-day moving average, as well as this Fibonacci level here. This chart is of the 10-year Treasury, and we don't want this to go up. We want this one to go down. Okay, so this is a chart that we want to see go down, and you see it banging on this ceiling. We go over here to our mortgage-backed security that we've been watching here. And once again, we're kind of just following this 25-day moving average, up and down, up and down, up and down. Earlier today, this was red. It's kind of turned green here. We're starting to see some improvement. So the market is kind of accepting the thought of going with 0.75% on the federal funds rate instead of 1. We'll see whether that person really has the right intel. We'll see what comes out here. But where are we as far as our home loan interest rates on our Brent Bruce Daily scenario here? Again, we were talking about 5.5% on Friday, but for only like $85, I believe it was, we could get a 5.375. So realistically, we probably would have been offering a 5.375 on our 30-year fixed mortgage. So where are we right now? Okay, 5.375. All right, now that's giving a credit of 529. I can tell you earlier today, I looked up the same scenario and we were at 5.5. So the interest rates have actually come down through an intraday reprice. So that's something that you need to learn as well. They actually do change rate sheets and home loan interest rates during the day, not just overnight and in the morning. So if you talk to me or any other loan officer and they say, hey, the rate today is 5.5, halfway through the day, we might go, well, it changed. Now it's 5.75 or it's 5.375, 5.25. They change all the time, especially now during very volatile markets, so that they don't end up losing money essentially and hedging improperly. So that's where we are right now, 5.375 on our very well qualified scenario. If you have any questions, please let me know and I will be sure to update you again soon. Make sure that you are subscribing, liking, and sharing through our YouTube because we will be moving over to YouTube exclusively here in the near future. Talk to you again soon. Bye.